Hey guys, welcome back to another video by Fully Informed Trade, or FI Trade for short, knowledge for everyone. My name is Alex Cho, and right now I am talking about the Euro-US dollar pair. Euro-US dollar pair does continue to fall on the session. It did break below that 20-day moving average previously. It follows it up with continued losses. However, this candlestick right here hasn't really confirmed below this candlestick until it engulfs the previous pattern right there. So we got to watch that very closely. However, all things said and done, Europe is most likely going to have to do some form of monetary inflationary policy. If not, it doesn't change the fact that people lack any confidence in what the European Economic Committee is doing right now currently, so that's why people are selling their euros. It's a double whammy because, one, there's a lot of fear in Europe. Fear in Europe means people are going to flee that currency pair. Number two is, because of their economic circumstances, they are going to pursue inflationary monetary policy and fiscal policy at some point. We really don't know when they're going to do it, but we know they're going to do it, because it's either that or you're going to hyper-deflate, the country's going to default, and everybody else pretty much gets killed in this market, primarily the Spanish, the German bonds. It doesn't really matter. You can slap a AAA rating on Germany, but that could be taken away just as quickly as anybody else's AAA ratings were taken away in the past. And this could happen just because of the fact that these guys just don't seem to get the fact that you need to inflate your economy or you guys are going to go default. It's that simple. And even if they don't figure this out soon, the Euro-US dollar will be sold off because there's a lack of confidence in European bonds. What I mean is that a vast majority of the time, currency exchange rates are fluctuated based on the demand for the demand for different country bonds. Right now, there is very, very little demand for European bonds, and therefore people are more or less selling the Euro-US dollar, and they're basically going long the dollar because they want to buy U.S. Treasury bonds. And of course, we have, perhaps the lowest amount of insuring against the risk of default through a credit default swap on our Treasury bonds is way cheaper than trying to insure the debt on European bonds like the Italian bonds, the Spanish bonds, and the German bonds. So these swaps, okay, are so expensive right now in Europe you wouldn't imagine. So overall, we have to think for a second. If you're buying European bonds and you think that you might have a possibility of defaulting, chances are you're going to sell your European bonds. You're going to take your currency, turn it into Japanese yen, turn it into US dollar, turn it into the Singaporean dollar, and you're going to buy your bonds in some other country. And that's what's happening in Europe. Now later on, when Europe does put their 0.10% European Central Bank interest rate, and the European Central Bank does another $3 trillion worth in monetary easing or whatever, then you're going to see the Euro-US dollar continue to fall anyway, because at that point they're inflating their economy. So no matter what, you're going to see the Euro-US dollar fall, because in the short term our issue is a lack of confidence. In the long term, it's still inflationary monetary policy. So again, whoever says, oh, the euro is going to do just fine because in the past, based on so-and-so date, or if you ever look at Bloomberg or CNBC, you'll say, well, I noticed this correlation be from the past, and it went down to this level, and it's going to come back up to this level. Well, unfortunately, guys, this time it's kind of different because we're trying to bail out Spain, because there's a lot of uncertainty in the marketplace, and because at this point, Germany, Italy, Spain, and Ireland, they don't have any choice but to inflate their economies. And if they don't, they're going to default, every single one of them. So that does it for me for today. I think the Euro-US dollar will continue to fall, and it is unlikely that you are going to see any other scenario besides the occasional relief rally where people jump up and down and say, hey, maybe the Euro-US dollar is going to reverse. No, I don't think so, guys. Come on. Let's be a little realistic here. This market has some serious issues. Take care.